wasn't just business news, we're news for business people.
Good morning, I'm Alex Matthew and you're watching Daybreak on Bloomberg Quint Live. Let's first look at the headlines. It's a strong start to the week for Asian markets as investors take cues from Wall Street's record closing on Friday. Macro indicators are expected to register an uptick this week in Asia. Brokerages approve of Idfc Bank's latest efforts to increase its retail play by merging Capital First with itself. 5 investors will pick up a little less than 4% stake in HDFC for around 13,000 crores. And Israeli Prime Minister Benjamin Netanyahu will meet the Indian president and hold a second round of bilateral talks with Narendra Modi in Delhi today. Let's turn to the US markets now, and stocks rose to record highs on Friday after some of the major financial companies in the US reported strong quarterly results. The S&P 500 is enjoying its best 10-day start to a year since 2003. Bloomberg's Abigail Doolittle tells you everything that happened on Wall Street in this report.
Friday's Wall Street session brought about the best day for the Dow in 2018, finishing higher by nearly 0.9%. This was in line with the overall rally for stocks on Friday, with all 3 major averages finishing higher and putting in new record highs. For the S&P 500 and the Nasdaq, that tech-heavy Nasdaq, each have climbed higher 8 of the 9 trading days in 2018 so far. Pretty bullish. Now, behind Friday's rally were some of the well-known names such as Amazon, Microsoft, Cisco, and JP Morgan. All of these stocks hit new all-time highs. For the tech names, positive analyst comments were out there and helped, while JP Morgan rallied despite a trading revenue miss as investors look ahead to the benefits of tax reform. A notable laggard on the day, though, even though we had the big rally, was Facebook, down about 4.5%, its worst day of the year, after CEO Mark Zuckerberg said the company is changing its focus to prioritize friends and family, and something that may cause user metrics to decline. Twitter, on the other hand, gained as analysts are positive on the possibility of a turnaround in 2018. And of course, Bloomberg LP produces TikTok, a global breaking news for the Twitter service. And finally, on hotter than expected core CPI data, yields climbed as bonds sold off, with the 2-year yield back above 2% for the first time since before the financial crisis. In New York, Abigail Doolittle, Bloomberg News.
Right, let's take a look at Asian markets now, and they've opened on a positive note after the strong Wall Street close. And if we have Rosalind Chin, Bloomberg's Rosalind Chin, who's live from Hong Kong, we'll go across to her for more details. Morning, Rosalind. What do you have for us? Rosalind, can you hear me?
Well, we've been taking a look at Japan, where the Bank of Japan... Hi, we've been taking a look at Japan, where the Bank of Japan governor has been making comments, and that was earlier in the session. Now, he said that Japan's economy is expanding moderately, expects the CPI to pick up towards 2% and will continue easing to reach the price target. But he did not use words like powerful or aggressive to underline their movements towards reaching this price target, and that has been taken by some currency traders to be a green signal. And we saw the yen falling after his comments, the yen at 110.77 right now against the US dollar. Also staying in Japan, we've also got SoftBank, one of the biggest movers out there. In fact, it was gained about 5.9%, as much as that earlier in the session, and that was on speculation that it's going to list its mobile group. Now, SoftBank did say that it is an option, but there is no decision on whether or not it's going to IPO yet. But that, of course, was enough to send the SoftBank shares much higher. And let's have a look at how it's trading right now. Currently, it is up 3.9%. In South Korea, we see that financials are gaining there, and overall the Kospi index is up about 0.25%. In general, I think across Asia, we are seeing this optimism that's come off the back of the US rally, with the US markets rallying to fresh records. moving over to Asia as well early on Monday morning, and we're seeing most of the board here in green. We're looking ahead to the rest of the week where we'll see some more financial data, economic data rather, coming out of China at the end of the week. But until that time, we're going to be hanging in there to see what else is going to be factoring in on the markets. But certainly Haruhiko Kuroda's words moving the yen there, and of course also the Nikkei and the topics, both of them making gains at this hour. Back to you.
Thanks so much for that, Rosalind. And let's turn now to the Indian markets, and Agam Vakil is standing by to tell us all that's happened that you have to know about at the start of your day. Agam, a lot of positivity from overseas that's going to lead into India as well.
Good morning, Alex. Certainly, we are looking at that, and that's indicated by the kind of moves that we're looking at as far as the SGX Nifty is concerned. So let's pull up the SGX Nifty and see what's done. As far as that goes, we are looking at a gain of as much as 0.5%. And on the whole, given the fact that we've seen so much strength coming in, let's also take a look at what the ADRs have done. So moving on to the ADRs, well, ICICI Bank has moved up as much as 2.3%. No change in Tata Motors, but look at Infosys. It's down 2.7%. I'm going to be watching out for Infosys, considering we did see earnings post-market on Friday, and this is likely to see it's likely to have an influence on the way Infosys opens today as well. Wipro, of course, largely flat. But moving in, what are the institutions doing? And as you can see here, we have seen a little bit of an outflow when it comes to the FIIs. Domestic institutions, however, continue to put in money, nearly 700 crores put in here. And on a month-to-date basis, well, it's fairly evenly put in. It's, between the FIIs and DIIs, about nearly 1,500 crores coming in from DIIs, and FIIs putting in well over 1,600 crores. That said, moving on, we're watching out for the Nifty Media Index, which did very well. Of course, a lot of this was on account of the gains that we saw in Z Entertainment, and of course, Nifty Metals also moving out to a certain extent. One sector which saw some weakness was the Nifty Realty sector, or rather the Nifty Realty Index, which moved down by as much as 1.5%. But in terms of the Nifty contributors, the big gains came on the back of ICICI Bank, Reliance Industries and HDFC. So two heavyweights from the financial sector leading the gains. On the other hand, losing, and we are looking at some amount of weakness on account of ITC. HDFC Bank, though, contrary to its to HDFC Limited, we're looking at about a near 4-point cut there. And other than that, we're looking at some amount of weakness coming in on the back of TCS and Bharti Airtel. But that said, it's going to be another very interesting day, and we will be watching out for Infosys as well as IDFC, of course, on the back of news and how that works out in trade today.
Right. And Agam, you also have an update for us from the futures and options space. How is that going to pan out today?
Right, Alex. So, as I mentioned, we saw the Nifty move up to a certain extent, and with that, we've seen some, build up of open interest. Well, by some, I would mean very little, but, it's about less than 1% increase in OI. And when it comes to the Nifty Bank, futures, again, this is where we're looking at a little more momentum picking up. So nearly 12% added as far as open interest is concerned. That said, moving in, and as far as the WIX goes, we've seen a decline of 2% at around 13.7. So, it's been moving between 13.5 to 14.5 over the past 7 or 8 hour sessions. But the Nifty put call ratio remains unchanged at around 1.74, and this is reasonably high. That said, in terms of changes in open interest, we're looking at a lot more, build up in the 10,600 and the 10,700 puts. And of course, that said, there's a lot of changes in the F&O band. So we have Dish TV, Gen Irrigation and Kaveri Seed Company moving into the band. So expect restricted trade there. And we're watching out for Z Entertainment, which moved up by as much as 2% and did see about a 22% increase in open interest, along with Gen Irrigation, of course, which of course moved into the band, which also saw nearly 22% increase there. So plenty of stocks to watch out for. Infosys is one key stock out there, and also the index, of course, whether or not it manages to hold on to its levels.
Thanks so much for that, Agam. Let's move on to the rupee and the bond market now. And Saloni Dhanuka is here to give you all the details in those two markets. Morning, Saloni. What do you have for us?
Good morning, Alex. So the Indian rupee on Friday managed to end higher by a modest 3 paise to 63.63 levels against the dollar. Now it was a highly volatile trade for the home currency as it swung widely between a 30 paise range throughout the day. Now remember, for the week the rupee has depreciated by a good 26 paise against the dollar, thereby snapping a 2 straight week rally. Now the home currency was pressurized by rising crude oil prices overseas along with sustained capital outflows. However, highly bullish local equities along with weakening of dollar supported the rupee's big move on Friday. Well, on the global front, dollar index was broadly weaker against its major traded rivals. The index was down over 1% after slipping to a 4-month low of 90.95 levels. The dollar traded lower despite positive economic data, wherein the retail sales picked up to 0.4% in December, which was in line with expectations. However, the inflation rose to 2.1% over the last month, while the common currency euro ended over 3-year high against the dollar on the hopes that European Central Bank are preparing to reduce their vast monetary stimulus programs. They are ready to trim it down. While coming back home, dollar rupee is trading at 63.60 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for the Indian rupee in today's trade. Moving on to bond market, sovereign bonds have come under pressure on Friday on the back of rising crude oil prices, excessive supply of debt, as well as accelerating inflation, while yields on 10-year benchmark ended 2 basis points higher at 6.46%, while for the week it was up almost 17 basis points. And lastly, global funds increased their rupee debt holdings for the 5th consecutive session on Friday. They infused close to 200 crore according to NSDL data, Alex.
Thanks so much for that, Saloni. Now, clearly the markets are going to take cues from the key macroeconomic data that was released on Friday after market hours. Industrial production growth surged to a 19-month high in November, though inflation inched higher, with retail inflation rising to 5.2% in December. So those are the final macro points that Finance Minister Arun Jaitley will have to consider while he prepares his budget. So what to make of the latest data points? Ira Duggal has this report.
Interesting turn in the economic data released this Friday evening. Much stronger than expected numbers from industrial output and consumer price inflation rising along expected lines. The industrial output numbers stole the show at 8.4% growth in industrial output, much higher than the 4.4 that was being forecast, and a nice spurt up from the October number, which was revised down to 2%. And if you look into what is actually building into this IIP number, it's manufacturing all the way. 10.2% growth in manufacturing, mining weakish at about 1.1% growth, and electricity at under 4% is also relatively subdued, but mining definitely looking extremely strong. If you look at the use-based classification, capital goods have risen 9.4%, and infrastructure and construction, a new category created in the new IIP series, is up 13.5%. So it does look like, if you look at last month's numbers and this month's numbers, there is some pickup in manufacturing activity on the ground. This pickup is also being told in the PMI numbers. PMI numbers in November and in December in particular were higher, and should the IIP numbers mirror the strength in PMI, perhaps we could see the strength in industrial output sustain. We say perhaps because the IIP doesn't always mirror PMI, which is a survey-based indicator, in contrast to IIP, which is an output-based indicator. Not to say that there are no distortions in the IIP number. There always are. In this cycle, it's been the digestive and enzyme segment which has been creating distortions. That segment saw a 110% jump in output and added about 2.5 percentage point to the index. You also had, apart from that though, other segments which sort of tell the story of manufacturing, such as parts of trucks and lorries, which saw nearly 200% spurt, axles up almost 62%. So essentially saying that there is some evidence, at least based on this data, of strength in the manufacturing sector. Whether it sustains or not, we'll wait and see, and perhaps based on the PMI numbers, it may. The consumer price inflation numbers told a story which was not unanticipated. Inflation at above 5% now, 5.2%, strengthening from 4.88% in the previous month. The headline number is being pushed higher by categories like vegetables, which are up almost 30% year on year. On a month-on-month basis, though, vegetable prices have cooled off. Pulses continues to be in a down cycle, so the year-on-year number is negative. Even the month-on-month number for pulses is negative. But overall, the food and beverage category saw inflation of 4.85%. compared to 4.4% in the previous month. If you look at the core numbers, they're actually slightly divergent trend in the core categories. So categories like clothing and footwear, for instance, have seen lower year-on-year inflation this month compared to last month. But housing has seen a pickup in inflation to 8.25% compared to 7.36%. This is the impact of the house rent allowance partly playing in. So to that extent, it is a little bit technical. And of course, fuel and light inflation is at nearly 8% because of the higher fuel and commodity prices that we are seeing globally. But if you take the two indicators together, I think the message is fairly clear that this part of the economic cycle is going to once again be dominated by inflation concerns, leaving very little room for the Reserve Bank of India, or actually no room for the Reserve Bank of India to cut interest rates. One hopes that this pickup in inflation comes with a pickup in growth, because if growth continues to be subdued and inflation starts to rise, then you're stuck between a rock and a hard place.
Shifting focus now to the commodity space, Jayesh Kilnani joins in with all the details in that market. Jayesh, good morning.
Morning, Alex. Let me start off with oil prices, which actually posted a weekly gain after Brent briefly touched the 70 per mark. Now, WTI gained as much as 4.7%, while Brent was up more than 3% for last week. Now, all of this was on the back of US rig oil count, which rose as much as 10. Now, Brent and WTI both actually posted the best weekly gain since October last year. As far as brokerages are concerned on oil prices, we have one from Bank of America Merrill Lynch, which says that Brent is unlikely to sustain above the 70 per mark. So we'll have to wait and watch what really pans out over there. As far as base metals is concerned, most of the base metals traded, mixed on the London Metal Exchange, backed by Chinese trade data, which shows that there is robust demand across the globe. We had zinc, which hit a decade high, but ended flat in trade. Aluminium, which was the best performer, gained as much as 1.8% on the expectation of US imposing tariffs on imports. Positive for aluminium prices. Nickel and tin, on the other hand, gained as much as 0.5% to 1% each, while copper and lead closed down about 0.5% each. As far as Shanghai Futures Exchange is concerned, we are seeing most of these base metals have opened on a mixed note, where Shanghai Steel has opened 1% lower. Moving on to the precious metal space, gold prices posted their 5th straight weekly advance, which is the longest stretch that we've seen since mid of 2016, that is last year. This is on the back of the dollar index, which has extended its decline to 4 weeks in a row now.
Thanks so much for that, Jayesh. Now let's move on to some of the news updates from over the weekend. The boards of Idfc Bank and Capital First approved a merger between the two entities on Saturday. The move will create a lender which will have a portfolio diversified across large corporate lending, small and medium enterprise loans and retail credit. Vishwanath Nair sums up the deal contours in this report.
On Saturday, the boards of Idfc Bank Limited and Capital First Limited announced that they will be merging the two companies to create a combined entity with a loan book of over 88,000 crore. This merger will be executed through a share swap deal, where for every 10 shares of Capital First Limited, there will be 139 shares of Idfc Bank Limited given to the shareholders. What this deal exactly means for Idfc Bank is that it will be able to diversify its loan book. At present, Idfc Bank is heavily dependent on infrastructure lending and a large corporate lending as part of its loan book, but with Capital First retail and SME loans coming into the picture, there will be a more diversified loan book. V. Vaidyanathan, who is the MD and CEO of Capital First Limited, will be taking over as the CEO of the combined entity of the new bank. Rajiv Lal, who's the current MD and CEO of Idfc Bank Limited, will move to a non-executive chairman role. This deal, however, is important for Idfc Bank because only a few months ago it had to back out of a proposed merger with Shriram Group. This merger was announced in July last year, but 4 months of discussion later, both groups had to pull out of the deal because they couldn't agree on what share swap agreement they could go forward with. How the current deal with Capital First will help Idfc Bank become a more retail bank, that is something that we will be watching right here on Bloomberg Quint.
Well, let's also bring in Shraddha Babla to take a look at what brokerages are making of this merger. Shraddha, what's the word coming in? Will it be fruitful on both ends?
Well, yes, Alex, that is exactly what brokerages analysts have said in their report, that it's a win-win deal for both the companies. And of course, the fact that they see IDFC Bank, Capital First, as a better fit for IDFC Bank rather than Shriram. A merger did not go through. Just a quick take on what some of the brokerages had to say. Antique Broking said that the increased provisioning costs can actually eat up the benefits from lower borrowing costs. Now, remember, IDFC Bank or rather Capital First has a huge SME book which will witness higher provisions in the banking avatar. They've also said that while Capital First is growing at a faster rate, its loan book is just about 1/3 of IDFC Bank's, and so the overall growth rates will actually slow down to mid-teens as far as the combined entity is concerned. And they've said that any further upside will be contingent upon successful integration and realignment of the bank strategy. You have Edelweiss, again they've said that strategically the merger is in the right step to achieve the stated intentions for both Capital First and IDFC Bank. They have said that the merged entity will have about 35% of the retail assets with an established platform, diversified product suite, adequate capital and potential to grow on a sustainable basis. They do see deposit ramp up and priority sector lending or PSL requirement as a near-term challenge, but over the medium to longer term, they believe that the merger will be value accretive and synergistic as well. In fact, just a quick snapshot of how they're valuing the merged entity. Edelweiss has valued the entity at about 70 to 75 rupees, while that's Antique and Brokerage has also set a target price of about 74.4 or so as far as the entity is concerned. In terms of what the immediate reaction is likely to be on the stocks today morning when trade opens, Antique says that they see about 10 to 12% upside for Capital First, while they don't see any significant upside for the stock price of IDFC in the near term. Edelweiss says that in the near term, just on the basis of the declared swap ratio, benefit seems like it will flow more to Capital First. They've revised Capital First stock target price to 1,033 from 927 earlier, while maintaining a buy, and they have also revised the target price of IDFC Bank higher from 67 to 74, and they have maintained a hold. Lastly, we have Reliance Securities, which again has reiterated that it's a good deal for both the companies, but the merger ratio they said will benefit Capital First more in the shorter term, while in the medium or to longer term it will benefit IDFC Bank more. So Capital First, they believe, will see a bigger spike in trade today, Alex.
Absolutely. Those clearly are two stocks that you have to watch out for. But the other big update over the weekend, and this was anticipated, HDFC board has given its a nod to raise funds via a combination of a preferential issue and a qualified institutional placement of shares. Nikki Munchandani has more details. Nikki, what's the amount to be raised and what else are you picking up?
Sure, Alex. As you correctly pointed out, the fundraising would be a combination of both preferential share allotment along with your QIP. The amount does not need not exceed 13,000 crore as per the board approval. The preferential allotment aggregates to a capital infusion of around 11,104 crore, and this represents around 3.87% of the corporation's enhanced equity post the capital issue. In terms of allotment, there are the investors includes the like of GIC, KKR, OMAS and Premji Invest. The preferential allotment is expected to be completed within a span of 15 days to the shareholders, and QIB to be raised, the amount there should not exceed a sum of around 1,896 crore, and this needs to be completed within a span of next 12 days. The objective behind the fundraising plans will be to participate in the preferential issue of HDFC Bank to the tune of around 8,500 crore, and to enable corporation to maintain a minimum shareholding in HDFC Bank. It is also to explore inorganic opportunities in health insurance sector along with your real estate sector, and also for funds in investing in debt and affordable housing project. If you look at the preferential allotment, investors are to be issued in the following way in which it has been shown on the chart. You'll see Waverly, OMAS Administrator, Silverview and Premji Invest. These are the number of shares out of the 6.2 crores that have need to be invested. This is the breakup of that, for that matter.
Right. Thanks for that, Nikki. Now, over to another piece of information, or rather an update that came post-market hours on Friday, and I'm talking about the Infosys results. It surpassed its profit growth estimates in Q3 thanks to a one-time tax benefit in the US and also a rise in growth on the back of adoption of digital services. Agam Vakil is here to sum up the key takeaways from Infosys Q3 performance. Agam, what do you have for us?
Well, it was a quiet quarter for Infosys, Alex, very much in line with street expectations, considering we were expecting some subduedness owing to, your furloughs. That said, we did see about 1% dollar revenue growth sequentially, and, coming down to my guidance, again on expected lines, that was maintained at 5.5% to 6.5% for the year financial 18, and moreover margins guidance was also maintained between 23 and 25%. That said, the profits did see a boost of as much as 33% on a quarter-on-quarter basis. The reason is because they signed an advanced pricing agreement with the US IRS, and this was to the tune of $225 million, which was reversed in income tax. But when it comes to the performance for a lot of its verticals, financial vertical and the manufacturing verticals remain subdued with 0.1% sequential growth. On the other hand, the energy vertical did pick up. It did saw about a 2.5% growth sequentially. And when it comes to geographies, again, business from North America remained quiet at around 0.7%, and Europe, however, not unlike TCS, did see an uptick of around 4.7%. But that said, we do have the new CEO and MD, Salil Parekh, at the helm, and let's listen into as to what he has to say about the immediate challenges faced by Infosys.
There's work on what is the market opportunity. There's work on our client relationships. The people dimension is very critical. And then there's work on how is the service portfolio rejuvenated. So those are the real elements that we are digging into. And from that, with interactions with our clients, with employees, with our partners, over the next 2 or 3 months, I will complete the exercise. Our focus today is to make sure that as we grow into the new areas, we offer the opportunity for reskilling for all of our employees. Beyond that, we have in all of our operating metrics already shown a high level of utilization. We have a real strong demand in the market.
The new head of Infosys there. But let's move on. We've already given you a few stocks that you have to watch out for today. There are a lot more in the news. And Shraddha Babla is back to tell you all about the stocks in news. Shraddha, over to you.
Well, yes, to start off with, we're keeping an eye out on Team Lease Services and Healthcare Global Enterprises. Both these stocks where the FII or foreign investment limit of 24% has been reached, so no further FII buying will be allowed. But in case of Granules India, RB has approved hiking the FPI investment limit from 24% earlier to 49%, so this may see a positive reaction. You also have Religare, which has signed a pact to extend its deal to sell its healthcare insurance operations to True North. Now, the value of the deal has been revised upwards to 1,350 crores on account of delay in completion. HDL board has approved allotment of 200 crores worth warrants to the promoter at the price of 70.50 per warrant. You have Lasa Super Generics, where they've said that the board will consider conversion of unsecured loans into equity at a board meeting on February 7th. Filatex India, there the company's expansion project as the Dahej has started trial production, so again some positive reaction expected there. And lastly, Exim Bank has declared Venus Remedies and its directors as willful capitals. The company has said that they will contest the same, but we could see some negative reaction on that one.
Thanks for that, Shraddha. Let's move on to the big brokerage calls of the day, and Somit Sarkar has all those details. Somit?
So the big brokerage that today we have is ICICI Direct on Himadri Specialty. Now they have initiated coverage on the stock with a buy rating and a target price of 245, which suggests a potential upside of 30%. Now according to the brokerage, growth visibility for Himadri Specialty is healthy with impressive capital expenditure plans and firm financing plans, and amid robust product demand. Now when it comes to product wise, they're saying that the coal tar pitch will see its dominance sustained and is a cash cow for Himadri, and SNF is a construction chemical which has a big opportunity. When it comes to carbon black, the industry is in a sweet spot and Himadri will be a key beneficiary of this. And when it comes to advanced carbon material, where they have newly come up, it will fetch high margins going forward and will boost earnings from FY20. Now the debt of Himadri Specialty is at control level and the debt to equity is steadily declining. Now they're expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 23%, 29% and 38% over FY18 to FY20. They're expecting Himadri to command premium valuation among its peers, and Himadri is one of the few listed players with exposure to electric vehicle according to ICICI Direct.
Thanks, Somit. Now, the Chief Justice of India is said to have assured the Bar Council members that he will resolve the rift with the 4 senior judges amicably. Justice Mishra, who met the Bar Council members late last night, also received a letter from 4 retired judges, including a former Supreme Court judge, where they said that they agree with the issues raised by the 4 Apex Court judges over allocation of cases, and they also said that the crisis needs to be resolved within the judiciary. Find that story and a lot more on the website bloombergquint.com. But with that, we're completely out of time on this edition of Daybreak. All you need to know is up next, so do stay tuned. This is Bloomberg Quint.